Traders, you may start your Thanksgiving holiday. The Fed minutes don't tell us anything we didn't already know about their short-term plans. Quoting from the minutes, most participants expressed a view that it could well become appropriate to raise the target range for the federal funds rate relatively soon, the minutes say. Of course, the data have to cooperate. Some, the minutes argue, said that if the data supported it, a rate rise should occur at the next meeting. There was a discussion about letting the economy run hot, pushing the unemployment rate further down, most members agreeing they were at or near full employment, but they disagreed about the impact on inflation. Some worried that that would force the Fed to raise rates too quickly if inflation took off. Inflation is rising, the minutes say, the members noted, but that was a good development. They were happy to see that, even if they couldn't be sure that it would last. Though the meeting was just a week before the presidential election, that subject apparently didn't come up, except for a brief mention of uncertainty about government policy as one of a list of reasons that business investment had been slow. There was discussion about developments overseas and their impacts on the United States, including Brexit and the European banking situation. And there was talk of October's money market reforms that had pushed down the price of short-term paper. Perhaps because they weren't focused on whether or not to raise rates at this meeting, they had time for a lengthy discussion of long-run monetary policy, including a discussion of whether to keep the balance sheet as big as it is. There seemed to be general agreement that they would rather have a smaller balance sheet, that a large balance sheet is generally effective only when rates are near zero. The minutes note that Fed Chair Janet Yellen said a decision on that wouldn't have to take place for some time. Apparently a decision on raising rates, though, will come much sooner. Amanda, Scarlett?
All right, and possibly as early as next month. Michael McKee, I want to go back to the point that you made about how the Fed postponed a decision on the long-term policy framework, considering the size of the balance sheet. Link that for us to the discussion led by John Williams of the San Francisco Fed when it comes to the neutral rate of interest.
Well, there is some interest in whether or not the interest, by changing the size of the balance sheet, you change the neutral rate of interest. There was discussion on that, no real agreement on it. A possibility, they said, that the neutral rate could rise if you lowered the balance sheet, but that was the wonky part of their discussions. They made no decisions on how that would really affect the economy in the long run, but it's an ongoing discussion, something they're going to revisit.